Good afternoon, everybody, from a very warm Switzerland. The summer has officially arrived, and good morning to all our presenters and guests from around the globe, and good evening to any of those joining from Asia. Thank you all for joining us, and welcome to our latest webinar in our monthly Refinitiv Quant webinar series. My name is Tamsin Williams, and I am responsible for business development of our quantum feeds business in EMEA here at Refinitiv. I'm joined today by three esteemed speakers: Tim Harrington, CEO of BattleFin Group; Tim Gaumer, our very own Director of Innovation and Fundamental Research here at Refinitiv; and Adam Barron, Director of Big Data and Quantitative Research here at Refinitiv also. So we have a great webinar series, webinar session for you today. We are discussing, once again, our second part of our alt data and fundamental data series. And as we head into the second half of this unconventional year, quant investors need the most holistic picture possible of a company's performance and prospects. We all know that fundamental data is key, but when it's commingled with the right alternative data, you can derive genuine and unique insights. So joining us straight from BattleFin's June Discovery Day, Tim Harrington will talk us through BattleFin's ensemble platform and some of the key trends that BattleFin is currently seeing. We'll then follow that up with Tim Gaumer, who will take a look at some key findings in the oil sector derived from the latest job postings data and combined with a sum of our IBIS estimates KPIs. And he'll be talking us through some of the insights that you can derive by commingling that data. He will then pass it over to Adam to take us through some live coding workbooks that he has created based on the insights that Tim has discovered. So before I pass it over to the first presenter, just some key housekeeping items. In your audience console at the bottom of your screen, you will see multiple application widgets that you can use. If you have any questions during the webinar, you can click on the Q&A widget on the left-hand side of your screen or at the bottom of your screen and submit your questions. We'll get to as many of them as possible as we can during the Q&A session towards the end. I will be taking notes of those, so please just drop a message in there and we will read your questions out at the end and get you the answers that you need. On the right-hand side of your screen, you will see a short survey. So please, before you disconnect from the webinar, please fill out that survey because we would love to hear your opinions. Tell us how you felt the webinar went. If there's anything in particular that you want to provide us with as feedback, such as topics that you might be interested in hearing more about, then that would be great. Should you wish to know more about our alternative data offering or any other Refinitiv data feeds, you have links at the bottom of your screen in the resources list, or you can email me directly. We will also be sending out a recording and the slides of today's webinar session once we have concluded the presentations. So just before we move on to our first speaker, we are going to kick off with hopefully an easy polling question. So our polling question today is, how would you describe your research practices? Are you focused mostly on fundamental, quantitative, or quantamental? So it would be great if you can just click on the answer that is most relevant to you so that we can have a good idea of the types of people that have joined us today, so that then maybe Tim can actually tailor his session a little bit differently. So I'll just give you a minute or so in order to fill that out. Oh, I can see on a sneaky cheat sheet, I can see the numbers coming in. I will just give a couple more seconds to give you all a chance to fill those in. And let's see. I think we have a good number through now, so let's see. So we have a relatively even playing field. 50% of you are quantitative, with 41% of you, 41.7% of you as quantamental. Okay, so that's quite interesting there for you, Tim. I will pass it over to you now. Thanks very much.
Thanks, thanks for having me. It's been a great partnership with Refinitiv, and we're always excited to be working with the Refinitiv team, Tim and Adam, Austin, Mahesh. So looking forward to a lot of new and interesting products coming out. I think today the topic is really something we love, which is around KPIs. So figuring out which key performance indicators are driving stocks, how you can use alternative data to actually use that. And I think it really lets alternative data shine. And I guess at BattleFin, we started the company about 8 years ago, and a lot of the internal employees and partners really came out of the financial industry. I'd worked at SAC and JP Morgan Ventures, and I know one of the issues we always had was going out and trying to find different data points and different insights. And kind of the genesis for us starting BattleFin was really to help people source, evaluate, test, and purchase alternative data. So as we kind of kick things off, one of the trends that I don't think anyone can deny or hasn't seen is just the amazing growth that's happened in data. In 2025, the world will create and replicate 163 zettabytes of data, representing a 10-fold increase from around the data created just last year. For those of you who haven't Googled it, a zettabyte is approximately 1.1 trillion terabytes. So, from that standpoint, data is here, it's growing. What do you do with that data? And what we focus on is a subset, really in the alternative data side. And we consider this anything outside what a typical, company would put out through earnings calls, 10Ks, 10Qs, things like that, where, interesting insights can be derived. And I think that, we break that down into 43 different categories of data. So that can be anything from satellite imagery, geolocation, web scraping, anything that, where we think that there's an interesting insight that can be garnered. And one of the things we've noticed in the last, call it 3 to 6 months has been how powerful data has become in the realm of, what's happened with COVID-19. So in the past, I think, alternative data was an interesting area where some people said, okay, maybe it's just for quants, or maybe it's, if you just want to call a quarter or you want some insight. And what it's really become is a must-have instead of a nice-to-have. And what it's not only data sets that you go out and pay for, it's a lot of the public data that's available now that can be used to see where cases have been flaring up, where cases might be going down. And I think it's been interesting to see how much demand has occurred for alternative data, just given what's going on with COVID. In April, we did a COVID-19 webinar, And then in May, we did one on reopening the world and just to see what was going to be opening quicker. And then we did one in June around earnings. Our next one is going to be in July, and we're focusing on healthcare, macro, and elections. And what we're really trying to do is just surface use cases and different KPIs that we think people can use to really gain interesting insights and kind of a really a better view of what's out there. So I'll take you through a couple quick examples. And this is our, just make sure everyone can see it. This is our platform that we call Ensemble. So we have close to 1,000 data sets that we've aggregated, organized, cataloged. I think where we differentiate is we actually bring in the historical data and try to make it easier to access and to use. And for today's webinar, I kind of wanted to highlight some of the power of alternative data and some of the things we've seen through some of our partners. So as a subscriber to our data terminal, you would come in and you might be looking for something specific to Zoom. So you could look at, you'd type in the data hunter category, Zoom enterprise growth or churn. Once you hit send, that goes to our data hunter team, which we have people covering Asia, US, and Europe. At the same time, you can go into the catalog and actually start looking through some of the different data sets. We have a search function up top. You could actually search for Zoom directly, which you'd see a product from Data Pulse. You'd go in, you'd start looking at the overview of what they offer, the product summary, why to buy this data set. Since we ingest the data, we actually run data quality reports, which are important from our standpoint for trying to understand just what the actual data set looks like, what coverage it has, where there may be holes, where there may be things that you need to be aware of. So what we want to do is give people the most amount of insight, and we even have the functionality where you can actually, do on-demand meetings with them now, pick the time that you want to meet with them. So it's really about making it easier for people to understand the data set and kind of figure out how they can use it in an easy and concise way. You could also search by category or even by sector. And as we were just saying, one of the other features that we think is really neat is the ability to open up a data set right now. Like in the time of COVID, what we've learned is you don't have 6 months. You really need to be able to dive into a data set, figure out what's going on. You can click on access that data set now. It opens up a sandbox environment with your data. So we think that that's kind of a game changer for how people are going to be able to use data going forward. And I think what we've seen recently as well is kind of, how do you take an investment thesis and, be able to find the insights within this data? Alternative data, it's not the end all be all. You still need to have the insights and the investment thesis and use this data to kind of give conviction to that idea or potentially lose conviction. So one of the things we had done recently and Data Pulse had sent was, if you looked across the landscape and saw there's Slack and there's Zoom, but on the other side, there's Microsoft 365, which I think we're broadcasting over right now for Teams. That is kind of a dual product that comes for free through Microsoft. So, what type of effect is that going to have on Zoom's gains and losses? What type of effect is it going to have on Slack? And I think one of the things that we found very interesting was, at our April event, we had them look at Zoom and look at Slack. And one of the things that we did see was, how are the numbers looking when you actually had a Microsoft account as well? Were you starting to see more churn as people kind of decided, hey, I don't need all three of these. I can make a choice into one. And from a KPI perspective, I know that the Slack earnings came out, and that was one thing that people were extremely concerned about, was just the plateauing of growth in the enterprise segment. So, by layering these different aspects together, you're able to get some really great insights into the KPIs going into those quarters. And it's only going to be more and more important as the next quarter happens and the next quarter. So that was one that we found really interesting on a KPI side. Another one that we spoke with and had present was a company called Sika, which really looks at kind of even the dental industry. And the way I kind of think about it is it's almost, they built like an app store for all of these dental offices that had legacy billing and product management software. And by doing that, they're able to see the order patterns and also the scheduling and a lot of what's going on in those industries. So from that standpoint, it was great because some of those were essential, but a lot of the non-essential things and procedures that were happening didn't, or you saw a 2 to 3 month period of a fall off. Now that we've kind of seen that reopen, there's not only been pent up demand, but it's been interesting to see the trends. So a lot of I think they listed a couple of the companies like Align, X-Ray, P&G, IDXX, and the ability to have this sheet where you can go to and say, all right, I'm digging into maybe Align to see what type of orthodontic revenue they're going to have, or how many Invisalign aligners are they doing. Really just it adds a lot of insight into these different research processes that we're kind of excited to see. And I guess that's kind of my wrap for now. If anyone has any questions, like I did see there's a question and answer. One of the things we always kind of like doing at BattleFin, though, is to see where people are kind of Zooming or Microsofting in from. So I don't know if people can put in the chat where they're dialing in from. I'm in Bay Harbor, Michigan, so a little off the beaten track. Our New York office has been closed for a while, so kind of escaped. But always good to see where people are coming in from. And once again, if you have any questions, please put them in the slides. I'll turn it back to you, Tamsin, and let you take it from there.
Thanks. Apologies for the delay there. Thanks very much for that insight, Tim. There aren't any questions so far specifically for you, but I'm sure there will be some coming in towards the end of the session. So with that, I will hand it over to Mr. Tim Gaumer, one of my Refinitiv heroes, I have to say.
So thank you very much for joining us today. So talking about important KPIs to consider during earnings season, kicking off here shortly in the US and other places around the world. I'm going to focus today on some of the oil majors. So specifically, I'm going to look at BP. I'm looking at oil companies because there's been such a broad range of outcomes here. I mean, Occidental here, best avoided. A bunch of others in the middle of the pack, including BP. And that's what I'm going to use as a running example throughout the rest of my presentation. So not to overstate the obvious, one KPI to consider during earnings season are earnings estimates. Right? So what is the consensus expectations? What's the benchmark that we'll use to consider whether a company has just beat, met, or missed earnings expectations? So with that, the gold-plated standard here is the IBIS consensus or mean estimate. So that's the best way to understand street expectations. To that, we're also going to add the Starmine proprietary SMART estimate, which is a re-weighting of the consensus, placing more weight on the more accurate analysts and the more recent estimates. And then the percentage difference between consensus, or the IBIS mean, and the Starmine SMART estimate is a metric we call predicted surprise. So a bit more on that. So the way the SMART estimate is actually built is looking at more recent forecasts and more accurate analysts. We rate analysts 1 to 5 stars, 5 stars being the most accurate. Only 10% of all analysts globally get a 5-star rating. It's a normal distribution. This is the actual estimates for BP. So I've kind of blurred out the names here, but you normally see the contributor, which is the brokerage firm, the name of the analyst, their star ratings. You see the most recent estimates and changes. And over on the right, you see the weightings. So 5-star analysts are going to get the most weight, and those with the most recent estimates are going to get the most weight. So you can see here in positions 2 and 3, 2 of these analysts get about a 10% rating. They just be one of 23 estimates in an average weighted mean. You can see there's 3 analysts at the bottom that are shown as X cluster. So this is referring to a revisions cluster algorithm. So when a certain number of analysts, at least a third of them, revise in the same direction within a few days of each other, we assume they're responding to new information that's come into the market. As company experts, they thought it was significant enough for them to revise their published estimates. The analysts who are lagging behind or perhaps a bit timid, understandable in this kind of market where a lot of companies have themselves withdrawn guidance, they're temporarily marked X cluster, like outside the earnings revision cluster, until they do get around to updating their estimates. So the way we rate and rank analysts is based on 6 look-back periods, the last 4 fiscal quarters, last 2 annual estimate periods. We compare them to the actual company's report, the vertical black bar, and to the consensus, or the IBIS mean, here shown in gold. So the analyst estimate is shown here in blue. To get a 5-star rating, analysts need to be different than consensus throughout the entire period, so they have to be earlier than their peers and ultimately more accurate. So it's a persistent skill. Analysts who are rated 5 stars are more likely to remain top ranked than fall to the bottom ranks. Of course, the consensus is most interesting when it's significantly different than consensus. We find that when that is statistically different, like plus or minus 2%, we get the direction of subsequent earnings surprises correct 70% of the time. So a really useful tool here in trying to anticipate what companies might do when they report next. Are they going to beat or miss? We get that hit rate correct 70% of the time. You can see here for BP, this is the actual chart here throughout history, that the consensus is shown here in purple, smart estimate is shown in gold, and you can see how the two deviated significantly back here in March, just after the company reported most recently. The smart estimate is leading the consensus down, so it's predictive of the direction of future revisions as well as earnings surprises. Use the smart estimate wherever you need a more accurate version of consensus estimates, which is a lot of places. We use it in our analyst revisions model, one of our most popular and most predictive quant models predicting the direction of future revisions. So our revisions model looks across the income statement, not only at EPS, but also secondary earnings, EBITDA usually, and revenue, and over multiple time periods, the current quarter, the full year, next year. Here's looking at BP's, a sea of red. So we rank all of our models on a 1 to 100 basis. These are regional relative percentile ranks as a default. We also provide things like sector relative, country relative, industry relative ranks. So on a 1 to 100 score, we put red boxes around low scores. Those are red flags. Negative indicators, and we put high scores with green boxes around them, indicating bullish signals. So you can see here there's been big downward revisions for this quarter across the income statement, but especially in EPS. You see that also for the full year and next year, we take advantage of that proprietary predicted surprise indicator, which is a reinforcing signal. You can see that's a whopping 66% for the current period. It's almost 38% for the full year. Never before in the 15 years I've been covering StarMine quantitative models from a fundamental research perspective have I seen numbers as big as this, indicating just how much different these leading analysts within our smart estimate revision cluster are deviating from their lagging peers in the consensus. Just so you don't think that, well, yeah, BP has a lot of red things there, but so does every company in this kind of economic slowdown, recession. It's an earnings recession. So here's a more positive example, right? So some companies are actually prospering. Look here at Tempur Sealy International. This is a mattress company. So you can see here positive revisions across the entire income statement for every period here. A huge 80% predicted surprise for the current quarter. So mattress company is doing really, really well. I have to say, as a manager with all of my team members working from home, it's a little disturbing why everybody suddenly needs a comfy new mattress. So I'd say, please, just get out of bed. Let's look at an industry-specific KPI. We have hundreds of these. We include with those a smart estimate and a predicted surprise, anything analysts publish a number on. So here we're looking at oil production per day for BP, and you can see the smart estimate is below consensus by 7.16%. So we provide a lot of additional insights on an industry-specific basis, and not just the overall earnings numbers. You can see here in late April, oil production per day, so the smart estimate for BP in gold dropped sharply below consensus. So that's April 30th here. So far, everything I've shown you is sitting on top of analyst or sell-side forecast, but keep in mind this April 3rd date here, when you see the smart estimate drop way below consensus, with both of them seeing a big downward revision. I mention that because looking at alternative data can give you some inklings about what's likely to come in terms of more estimate changes. So here, looking at an alternative data provider, LinkUp, which compiles and aggregates job postings for BP across a number of different sites, their own, a lot of the job posting aggregators. You can see that in yellow. So right after the smart estimate saw a sharp drop and the consensus slowly following, there was this big job posting cut. So BP went in and pulled down a lot of their job postings, continued down to zero. That was followed by these sharp cuts in the smart estimate and predicted surprise about a week or so later on that April 3rd date. So to take it from here, from a data science and quantitative perspective, I'm going to hand it over to my colleague, Adam Barron.
Well, thank you, Tim. So this part of the demo is going to really get a little technical, and we're going to try to pull in the two worlds that were described, the alternative data by Tim Harrington, and then the Refinitiv data that Tim Gaumer talked about. So let me just share my screen. So yeah, this is Python code. Many data scientists or quants, which I think many quants are called data scientists nowadays, use Python to explore, the data. It's just a typical Jupyter notebook here, and then the back end is something called QA Direct. That is a Refinitiv product. We also have QA Direct in the cloud, which is hosted on Azure. It's a Refinitiv product which has a bunch of tables of traditional data, the pricing, fundamentals, estimates, ownership filings, insider filings, etc. And thanks to our partnership with BattleFin, it's also beginning to offer the alternative data sets that we feel are quite job postings is coming in July. What you're going to see today is an internal preview. So, and I'm going to focus on the BP example that Tim Gaumer mentioned. Oh, and just, to give a little background, quick background about who I am on the StarMine research team that Tim kept mentioning that, produced smart estimates and ARM, except for that was a little bit before my time. Those was like, the late 90s, early 2000s. Particularly my focus as of late has been on alternative data, which is why I've been close to this BattleFin partnership to see which data sets work well with our Refinitiv data and to, kind of have an eye on what the next generation of StarMine models may be. So I'm looking for alpha like many of you on the call are, except for obviously we don't invest in it. We create these StarMine models, which are often available in daily and intraday feeds. So we're focusing on BP, and we're going to be using something called PermID. If you're not aware of it, you should really check out permid.org. PermID is mastered by Refinitiv. It's an open license identifier, which means you don't pay for it. We have PermIDs for public companies, private companies, their subsidiaries. We have it at the instrument level and the quote level. And we also, connect it to identifiers that you may be more familiar with, like RIC and ticker. And within QA Direct, we have more tables, which if you have the license for, like CEDAL, QSIP, ISIN, we have those connections too. And as part of the permid.org suite, there's a tool called record matching, which has on the site has a CSV type interface, but there's also an API. So if you have your own data and you'd like to get PermID on it, there's an option for it. So this is BP's PermID. Like Tim mentioned, we're going to focus on the year-end earnings predictions, and since we're talking about KPIs, I think I should highlight the industry KPI first. So we have, in our IVES product, we have tons of industry-level KPIs. In airlines, it's like passenger load, retail, same-store sales. We have pharma sales for the healthcare industry. And in energy, we have things like oil production per day. So we're going to, just highlight that first. And we're just going to look at the most recent period, year to date. So the first step is really, how do we grab the link-up time series for BP? So once again, we center around PermID, and everything is point in time, so we need to focus point in time. We're going to focus on the beginning of the year. And it's a pretty simple SQL to get you that. And what so here it is. Here's the identifier for BP in the link-up company ID. And then getting the time series is just a matter of, querying that link-up company analytics table with the company ID. And the time series looks something like this. It's daily. There's a created job count and a deleted job count. So this would be for BP's own job site. This isn't like DICE or Monster or Indeed, third parties which may lead to overcounting. This is their actual formal job posting site. And it's just, and the created and deleted is just the activity, what happened that day. What I like really working with in my own research is the unique active job count, which Tim showed a little bit earlier, because that's a snapshot of today, what is active on the website. And there's also this analytic about active duration. So for, on average, how long have jobs been active on the website? So then comes the Refinitiv data. Like before, we need to get the content set specific identifier, but we master it through PermID. So it's as easy as giving PermID and a date. Very simple query. And then here's the estimate ID. And the next is pulling that estimates time series. So this SQL looks a little complicated, but I'm actually putting putting a lot of effort to dumb it down, if you will. So if you notice, the link up is in a daily time series. Our estimate is actually intraday. So as an analyst changes his or her estimate, we record that and we have to update the consensus. And this can happen multiple times per day. So for easier plotting, I'm just doing this little trick here to get the last estimate of the day. If I wanted the full intraday time series, it'd be something as simple as this little bit of SQL. So the time series looks a bit something like this. The things to focus on are just to confirm, you're getting the period, the prediction period you're hoping for, end of year. And then the effective date, expire date, is the range for which the estimate is active, the consensus there. And just as a side note, we are looking at the consensus, but we also have a detailed table of, for each individual analyst, if you wanted to pay attention to one in particular, we have their whole time series for a given company and a given metric as well. But this is just the summary table for the consensus. And of course, we have a lot of statistics on the, on the consensus, the standard deviation, the high, low, but we're going to focus on the mean. And then similar, the StarMine smart estimates, the secret sauce that StarMine has been serving since the late 90s, how we got our name, StarMine, from, giving the analyst the 1 through 5-star rating. Same situation, just getting the basic time series is pretty simple, but I'm making it a little easier to plot by doing, instead of, getting intraday, getting just 1 point to represent that day, the last estimate of the day. And it's a very similar format to the consensus, except for we're having this smart estimate, which is, as Tim mentioned, weighted based on expertise, where the 5-star analysts, the better analysts, get the higher rating. And here's this predicted surprise already calculated for you. That's the difference between the consensus mean and the smart estimate that Tim was mentioning. So here is some more Python code. It's a little bit of pandas manipulation and, matplotlib, and just to, bring it all together. So this, once again, is the oil production per day. The yellow line is the link up job postings. You'll notice that, like many companies, they were pretty solid at the beginning of the year, but come March or so, they started pulling jobs. And, pretty big situation of pulling job postings right when COVID was hot in the news, and pretty consistent to, present day, where they're maybe down to 100. And the purple line here is the oil production per day IBES consensus, the KPI that we were looking at. And what's interesting here is its jump right here in May. Obviously it's preceded by the smart estimates, which Tim saw in the EPS example he was showing. But there's an interesting gap here. So in this case, actually, for this KPI, the job postings preceded it. So, I've been doing a bunch of research with LinkUp and our estimates, outside of this webinar. This is kind of like, Martha Stewart when she, is preparing a turkey, goes in the oven, and a minute later it's cooked. So, this is just one example from research I've done, but I've done a lot more. And the one thing that I've noticed is, oftentimes when there's a big jump in job postings, there's often a big jump in the consensus revisions in the same direction. But, sometimes one precedes the other and vice versa. So the real thing is, to be looking for, has there been a big drop or spike, and has the other signal had one similarly? And here, there's an interesting month gap. So for this metric, you kind of want to be aware of that. But, looking at the other ones with revenue, and, it's actually the reverse, as Tim highlighted, that in this case, it was the job postings that came after. So that's okay though, because most of my research actually has been on the revenue. So in this case, if the consensus and the smart estimates have already revised down, then you're kind of expecting job postings to go down. So you don't really, register it if they've done it. But when it's the other way around, and usually on revenue, that's when you should pay attention. So, if there's one takeaway besides the technical of how to glue all this together, it's really with the alternative data, like link-up job postings, the companies are often signaling some expectation they have through the job posting that the analyst may or may not be already aware of. The analyst probably are not monitoring the job postings. Maybe they are, but whatever motivated the company to pull or post more job postings, the analysts will eventually become aware of. They're very smart people working at these fancy banks. And, it's just really the sequence of that you have to pay attention to, because sometimes the analysts are ahead of the company. The company's, whatever the company is reacting to is already known, and then the company pulls job postings or posts more. But sometimes it's not the case. And that's really where there's opportunity. A lot of this alternative data, the pattern that you follow isn't as straightforward as the more traditional signals, but it's kind of conditional. Like when these things happen, you should pay attention to. So anyway, just it's good to pay attention to the link up, big link up spikes in relation to the IVAS stuff. So yeah, with that, that's the code review. I think we have this site, developers.refinitiv.com. I believe when we launch link up in July, there's going to be this code tutorial to show how to pull everything together should be there too. But right now, it's not, it only works on our internal dev environment, but it should be coming soon in July or a little bit thereafter. So with that, I guess I'll pass it back to Tamsin.
Great, thank you very much, Adam, and thank you, Tim and Tim, for your presentations as well. We do have a couple of questions. I'll kick off with Mr. Tim Harrington, and I will ask, one of the things that we see is that our clients, for example, if they are using alternative data, there is some level of an element of secrecy around it. And we've seen this at Refinitiv with, for example, our Starline contract as well. So my question to you is, what kind of demand are you seeing in terms of alt data? You mentioned that you group the data providers into roughly about 46 categories. Is there any insight that you could talk us through about where you're seeing most demand, or are you keeping tight-lipped on that?
It's a secret. No, I think where we've seen a lot of demand, which is understandable, has been in the healthcare side of things. Recently, I guess if we look back, to the beginning of the year, it was anything that could be used to gain insights into China. So we work with a company called Kumi Analytics. They do satellite imagery. They measure radiance levels of the factories. So when the factories were going dark in Wuhan, that was a great telltale. If you could be picking that up in February, March, April, you definitely had an edge. I'd say some of the things that we're seeing demand for now, anything around tracing. So is tracing going to work? Things like that. App Annie is one of the companies we work with that can show you the number of downloads in terms of those apps. And then the other big one for us right now is vaccines, because I think you can look at a lot of different areas, but what will really move the markets is going to be, is there a vaccine? When does it come out? How is it distributed? That's probably number one. I'd say number two, we're getting a lot of interest around elections. Obviously Biden versus Trump, how can you look at different polls, who can predict with data, that side. And then the last is kind of just on the macro front. So a lot of the smarter funds and PE firms and things are looking at what's Christmas 2020 going to look like, and if you think about it, you should be looking at a lot of the cargo companies and the transports, because they're going to have to be ordering goods from China or other places kind of July and August to fulfill those. So I'd say those are the three areas we're getting interested in now.
Okay, great. Well, I'm personally hoping that Christmas 2020 will be sunny, because I'm keeping my fingers crossed I can go home and see my family in Spain. So for Mr. Gaumer and for Mr. Barron, so you've both mentioned combining alt data with our StarMine analytics, and you touched on this concept, Adam, about what we might want to incorporate into StarMine in terms of alt data. Now, I know we have recently released the StarMine market psych media sentiment model. What insights can you give us in terms of what we're doing at Refinitiv and where we're going next?
I guess I can start with that. So behind the scenes, since our BattleFin partnership was announced, and even before that, I've been looking at tons of alternative data sets with, hundreds of BattleFin partners. Really, so things that I'm really excited about that I think are in the works are transactions data, people buying with credit cards, debit cards, online purchases. So that's, a really hot area. And, once again, I think the big, as I see it, there's kind of three prongs to consider. There's obviously what the market has priced in, which you get by stock price. That's probably the most basic content set. There's what the smarter folks see, the sell-side analyst, and with our smart estimates, we can kind of get a pulse on them. And then there's what the the data is telling us, and it's really kind of a race about can you glean something from the data that everyone else hasn't caught up on yet. So for me, the real trick in combination is not to follow alternative data in isolation, which many alt data vendors do, maybe because they haven't quite used the Refinitiv data, which they can now in the ensemble, in the ensemble exploration kits on there. But if you look at alt data in isolation, it's, you might see, wow, this is amazing. But really, the edge is only there if the general population through price and or the analysts haven't picked up on whatever the alt data is saying. So to me, it's really looking to see if that's been priced in to the market and into the analysts. But there's a lot of great data to do those studies for. And like I said, I've found transactional data to be exceptionally promising so far in my own studies.
And Adam, you touched on the fact that in your Jupyter notebook, you were using our QA Direct platform there. So question to you, you mentioned the fact that you were utilizing the link up data directly there. Question for you in respect of the platform, how easy was it for you to commingle that data? Did you have any kind of issues related to mapping the identifiers, either through our own Refinitiv content? Were there did you find difficulties in terms of normalizing the data, for example?
No, not at all. It's having worked with a lot of alternative data over the past few years, I can say that I've really grown a strong appreciation for what we've been doing in QA Direct. And QA Direct's been around for ages. Even before we had PermID, we had a centralized identifier called sec code that mastered across many different content sets, and now we just have PermID, and it's really, as you saw, it's really as simple as from PermID, the master identifier, get the content specific identifier, and you get it as a time series, and you can kind of merge the many data sets together based on that common identifier. And I think more of the data sets in BattleFin in the trial set ensemble are being encouraged to use PermID, so integrating in the exploration kits, and then later on for clients who purchase the alt data, we'll have a bit easier chance of combining with Refinitiv through QA Direct or other Refinitiv platforms that use PermID. But yeah, thankfully, because of that centralized identifier, it's been really easy. And Refinitiv as a whole does a lot of great normalization stuff to make sure the data is cleansed. Another thing you often have to worry about when you just get a raw data set. But yeah, so I didn't have to spend any time really double checking for strange data points in the estimates, because I know that all the folks that work in our content teams do a really good job at cleansing that.
Okay, fantastic. And Mr. Tim Gaumer, is there any insights that you can provide us as to what you're working on now or working on next that you want to share with the audience?
So a lot of the work I do is sort of piggybacking on all the hard work our quant research teams do. So new models, new insights, things like alternative data is new to me. So I think Adam made a great point. You know, when looking at companies and how to add value there, it's like trying to figure out what's not already priced in. You know, so if it's baked into the current expectations and outlooks, you know, there's not really a chance to add value or find alpha. So I like these things that we can look at where, as a traditional fundamental analyst, I wouldn't have been able to see. Right? So traditionally, analysts will do things like, you know, you'll tear apart financial statements, do financial statement analysis, either through our desktop platform or through Excel. You can do channel checks. You can talk to competitors. You follow the sell side, you know, look at companies' conference call transcripts. But where would I have gone to notice aggregate job posting data? You know, the fact that a company is either planning to hire a lot of people or they're pulling down job postings aggressively. So I think it's the opportunities are in these places that would otherwise sort of be hidden to a traditional fundamental asset manager. You know, and I include in the alternative data a lot of our ESG data too, environmental, social, and governance data. So that is sort of an alternative data set. We're seeing a lot more interest there, and I'm spending a lot of my time looking into some of those things as well.
That's fabulous and great to hear. So thank you very much for that. I see that we don't have any more questions. So I will say thank you, Tim, and Adam, for joining us today and for your insightful presentations. Following this webinar, we will be providing you with the slides and the recording. So all that's left to say is that please join us again on the 13th of July for our next Quant webinar, where we'll be covering lessons from the pitch, what data scientists can learn from Rugby's best. We'll be joined by the head of the Refinitiv Innovation Labs, Jeff Horrell. And for the rugby fans, we'll be joined by James Horwell and Tom Batchelor of the Harlequins. So full details of that webinar will be sent to everybody in the coming days. So please join us again for that session. This concludes our webinar for today. So thank you everyone for joining. Refinitiv wishes you a great week and please stay safe.